Hey everyone, Scott Smith of the Smith team at Keller Williams. Happy January 2022. Wanted to share with you four reasons, four ideas, I guess, kind of what to expect in the coming year for the real estate market in the Minneapolis, St. Paul area, and also as you kind of look ahead into the local market. So with that, just wanted to share with you some cool ideas and some great charts and graphs of what is happening in our real estate community. So on behalf of my brother Todd and I just wanted to say thank you for everyone that we were able to help in 2021. It was certainly a crazy real estate market, and we had quite some challenges. But all said, our team was able to help over 130 families with their real estate needs, and so we definitely learned some crazy, interesting strategies and tips to help navigate that real estate market. So with that, we also have our winter buyer and seller guides available. So if you know of someone or if you're thinking about making a move in 2022, this has got some great charts and graphs that I'll share with you today, but it's got 37 pages of great insights and information. We can email that over to you. So just go to our website and we can certainly send it over to you right away. So just a quick update on kind of what is happening within the real estate market. Four different things. What is happening as our market is actually getting more healthy. So one of the things that we've seen recently as we shifted from the crazy spring market and even in the summer, the fourth quarter of 2021 has certainly cooled, which is kind of opening things up for a healthier Q1 of 2022. The second thing that I'll share with you is the real estate market last year was pretty scary for a lot of people. They didn't want to jump into the shark-infested waters that we call real estate. But why they want to move now is a good time to really kind of discuss that. Also, interest rates, where they are, where they're heading, and also people have a lot more equity in their homes. So we've seen in the Twin Cities, we've seen the median sale price has increased $56,000. So people are sitting on another $50,000+ in equity in their home just over the last 24 months. So certainly a strong real estate market if you are sitting on that. So when is a good time to be moving? So people always say, well, it's going to be the spring market, so April, May, June. And actually, it could be further from the truth. Not that that isn't a good time, but in the Minneapolis, St. Paul market, the best time to get your home on the market, be ahead of the curve and ahead of the competition is January, February, March. I can show you charts and graphs all day long that will explain that. But in 26 plus years of real estate, the first quarter is always the best time of year because once we get into April, May, and June, yes, the snow is hopefully melted by then, but the real estate market is also, you're experiencing a lot more competition. So if you are selling and then buying, you want to get your home sold, closed, ready to go, and be ahead of your competition once those new listings do come on the market. So first quarter of the year is always the best time of year to be on there. And why are they moving? As home sellers have historically moved when something in their lives has changed, a new baby, marriage, divorce, new job. Pandemic impacted everyone, and for many, this became the impetus to sell and make a housing trade. So people are moving because they're impacting their reasons to move because they're realizing that their homes are maybe too small or not a good fit. Plus, trying to find a contractor nowadays, you might be looking at 6, 8, 12 months just to get someone on the books for that. So people are actually have stayed in their homes longer. If you look historically, it's anywhere from 6 to 7 years. If you think of, if it's a first-time buyer that bought their home and once they're stabilized in their job, maybe married, having kids, they are looking at possibly making a move within that 6 to 7, 8, maybe even 8-year mark. But when we had the housing crisis back a while ago, people stayed put. They didn't have the equity. Interest rates weren't as attractive as they are now. And so now we're starting to see that some of the people that would have moved maybe 3 or 4 years ago, and now they're in a spot where they're saying, you know what, let's make a move and take advantage of this because we're going to maybe be in this house for a little bit longer. So that's a great chart that kind of shows that average tenure. A lot of people delayed their plans and they're ready to move the next stage in life and ready to get on with it. So that's kind of what we've seen. This is from George Radiu from Economic Research from Realtor.com. So here's kind of what people are thinking of. Majority of sellers entering the market in the next year plan to list within the next 6 months, so the first half of the year. This is nationwide. Or we've got people that 2/3 of them that are planning to move sometime this winter. 93% have already taken steps towards getting their home ready for sale, working with an agent, reached out, and looking at the value of your homes. People are always curious, and obviously we can do a quick market valuation. You can go online, but in this market, it's people are looking back at tax assessed values, at online data. It just isn't accurate because of how the market is so dynamic in recent weeks and recent months. So here's what's going on. Number 3, interest rate update. What is happening with interest rates? Well, the powers that be, what is happening with the interest rates? I'll slide my picture out of the way so you can kind of take a look at that. We're seeing this downward trend back from 2020 when they were just below 4%, and now we're looking at kind of ticking back up as the economy starts to heal. We're expecting that interest rates are going to be moving upward. This is a great chart where it kind of shows for each year where the interest rates kind of fluctuated. And you can see the last 2 years, 2020 and 2021, were certainly low and very attractive, which is certainly fueling the real estate market. Love this chart. This is a great perspective for people that, if you look back to 2018, we were just kind of coming up on 5%, even at above 4%, and how attractive these lower interest rates are, which is awesome. And how do interest rates impact the price of homes? And so obviously we've seen interest rates dropping, and then we've seen price of homes certainly escalating upward. That's a great chart as well. So what are the powers that be? Freddie Mac, Fannie Mae, Mortgage Bankers Association, and the National Association of Realtors. What are they predicting as we go into 2022? Everyone is predicting that interest rates are going to be trending upward throughout the end of the year. So if you look at Q1, 3.3 for amazing rate for an interest rate. By the end of the year, 3.7. So looking at increasing almost 0.5%. Doesn't sound like a whole lot, but it could certainly have a big impact. 0.5% change in interest rate can impact your buying power by about 5%. So that home, if you want to buy it on sale before prices go up and before interest rates go up, certainly take advantage of that those spring interest rates. So looking at home price forecasts from Fannie Mae, Freddie Mac, Mortgage Bankers Association, and a couple other economists, economic organizations, and National Association of Realtors. All of them are predicting about 5%. NAR, interesting enough, is the most conservative as far as their pricing goes. So looking at a flat year, which for what we went through last year, it will certainly be a healthier real estate market. But the government vehicles that are looking at Fannie Mae and Freddie Mac are saying twice that. Historically, we've seen over the last 20 years, we've seen about 4% on average for price increases. And so actually with Zelman and NAR predicting a little bit less than that. So it's probably going to feel like we're coming back from Duluth and we're dropping from a 70 mile an hour speed limit down to a 55. It's going to feel like we're standing still. And we're going to hear all the pundits are going to say, what's going on with the market? The market's crashing. Prices are coming down. Well, we in the Twin Cities, we see seasonal adjustments all the time where we've got fast and slow, crazy and more moderate. So that's something that's not out of the norm for us and what we experience. What is the difference between a buyer's market and a seller's market and a neutral market? You can see the last few years we've been in a strong seller's market. The months of inventory, we could literally triple our inventory in the Twin Cities, and it certainly wouldn't feel very good, but it would still be well within a seller's market. And we're looking to probably have that inventory creep up a little bit as days on market trends will certainly tick up. The Twin Cities this year had average market time about 28 days, which in some areas it was about 2.8 days, but realistically it was about 2.8 days. And then with that, what they're predicting as far as values increasing. So median sale price across the United States, $350,000. What does 2026 look like? It's going to go up $111,285. Well, we can't hang our head on that, but that's what a lot of different people are predicting. So is real estate a good investment? We don't want to put it as an investment property, but is your home an investment? Certainly have a nice nest egg with that. So between the appreciation that we're expecting and low interest rates in 5-6 years, that gap is going to widen, and you're going to have a lot more equity in your home. So certainly, it's a nice nest egg for you. Again, any of these charts and graphs, we'll have them within our winter buyer guide and winter seller guide. If you or anyone that you know is looking for something like that, we'd love to be a resource for you, and certainly reach out to us online or give us a call. Thanks, and we'll see you next month. Bye.